Hey traders, this is Jason Jenkins. I'm founder and head trader at Jenkins Research Management. I wanted to just do a teaching lesson. Well, I'm looking at the price action here of Bitcoin. I thought of a couple things just to share as far as when to expect deeper pullbacks and then the location and where you want to be a better buyer. Um, but there's obviously a lot of interest and attention into the digital currency markets. It's fair to say that the majority of the traders really have no concept of what they're doing out there. They're chasing the highs, they're puking and selling into the lows. I mean, today was another great example where you just listen to the mainstream media or headlines, cryptocurrencies are crashing. I mean, this is not a new thing. These markets are very volatile, they're whipping around like crazy. But there's a difference between a natural pullback and a crash. And when I log into these different brokers and immediately across the top is headlines about how orders are delayed because of a backlog of withdrawals. I mean, that's people selling something like Ethereum today into the lows. And it's the complete opposite of what we want to be doing. So this is pretty common in markets, even in the professional realm. I mean, traders chase the highs and then they panic into the lows. Um, and that's a part of having the wrong psychology. And there's definitely a mental analysis part to trading. I like to break it up in fundamentals, technicals, cyclical analysis, and then mental analysis. But also having a model and a process will keep you on the correct side and not making emotional decisions or panicking into the lows. So that said, I guess my background is I built a directional model around my over 10 years of trading professionally, both on the equity side and then majority of the time spent on the institutional side. And I traded cash treasuries, and we traded, I mean, big size. We probably 50 to 80 billion a year in volume. I covered all the primary dealers, the treasury desk, talked to the heads of the desk, and then same kind of thing on the buy side. So, I mean, I would put orders in, be on the bid for 50 million, 100 million, 200 million, 10-year notes. So we traded real risk. And you have to have a process and a model when you're trading that kind of size. And, you got to, it's a business. So, I mean, if I was sloppy on my position or wasn't paying attention overnight, I mean, I put the whole firm out of business. Our desk, I ran a rates desk, we traded more size than probably 10 times what one trader would trade, maybe the entire year. I would take more risk overnight. It's just our desk and the rates desk. It's a deep market, but it can be very dangerous. You got to know what you're doing. So all this that I'm going to share with you comes from experience. This isn't just me, um, you know, thinking around here and putting out tweets. But this, I'll just share with you guys. We bought into the close here, the U.S. close. We nibbled a little bit here, and let me just show you what we've been talking about and doing. So we just started a fund and a cryptocurrency team or a membership group, and we're pooling our funds, we're trading together. It's a whole project that we're working on at jenkinsrm.com. I'll explain a little bit of that later, but we just started that, okay? So we have not been trading as a team for this move or this move, but I'll tell you, after both of these run-ups, this was a pretty orderly pullback, believe it or not. And after this run, this is a very orderly pullback. The reason being, you have to put it in context. So this was the start of the move. There's several concepts my traders know in here. We call this a BCI. This was a nice pullback to the 30, another chance to buy more. You moved to new highs and then you went vertical. And this is where you want to be selling, taking profit. You create angle and distance away from both the 8 and the 30. Now, after that move here, you get a pullback again to the 30, and this creates the second major higher low or pivot right here. Then when you bounced, you failed to get back to this high. Sure enough, you take out the lows, and then taking out the lows here, my traders know we call that the TMS, and that allows for the deeper pullback. And a lot of times you're going to see price come all the way back to the 200 and or what we call full pi cycle, which is this dotted green line. Can't really see it, but that's down here. And sure enough, you pull back. You didn't quite get back to the 200, but then that was between here and here is an area you want to start thinking about accumulating another position. Right? So this was at the low. You came back up, made a lower high, and then at this point in time you got another higher low. And this tells you right here, we call that a phase 2 higher low for a number of reasons. But this was the first sign that this is over, this down trade, and you're going to move back higher. And then obviously here we made a higher high. This is higher high. This is a higher high. This is a higher high. And that's followed by higher lows. All right, and then right here, this was the first sign of trouble, not holding the 30. And then right here, you couldn't hold these lows. As soon as that, you actually bounced there. But going through this area after holding tells you that you're probably most likely going to retest the 200 and or pi cycle. And so this is where, this was our last main buy signal, was right down in here, 2100, right into the lows. And of course, this is when Bloomberg, this is the headlines we're reading, you know, Bitcoin crashes, blah blah blah. This is exactly when we put out the buy signal. So we bought here, and then I took some profit here and here, and guess what? Now we're buying again the same area. So I'll nibble here. If we test 2100, I'll buy some more again. And then I even talked about a longer term move to maybe 1300, and that's where you want to be aggressive. So we don't chase the highs up here, and we have an add and reduce method where we don't just plunge in at one price and then set a stop loss and then set a bunch of made up targets that you just pray and hope that they're going to reach. That's just novice amateur trading. We want to buy in several lots. We want to add. There's times we want to be more aggressive with our position size. Sometimes we want to buy light. Depends on a lot of things. How price pulls back. It depends on where the cycles are. Depends on where price came from. It depends on how fast it got there. But the idea is not to be panicking into these lows. Okay? There's people chasing and buying here. There's people chasing and buying here. It's the complete opposite. We want to be buying here, taking profit. Buying here, right? And then we're going to be coming out of some on the next bounce. So there's kind of a lot on the chart there, guys, but there's a method to what this may seem madness. But I've been showing the same process for, you can do it in any security, any asset, any time frame. It's always the same. When you break the initial strong trend, you get the deeper pullback. And how do you classify and define the deeper pullback? There's very specific ways to do that. But anyway, that's what my traders know. That's what we work on together. So anyway, guys, just kind of a quick lesson on how to play the deeper pullback. And again, these pullbacks aren't pullbacks that are supposed to be feared. These are buyable pullbacks. Bitcoin's in a long-term bull market. You can see that just by the rising pi line. You can see that by the rising 200. All right. There's a lot of higher time frame charts that all tell you the same thing. So we're buyers on dips. We're better buyers. I like it here right at this location. And you know what? We may go a little bit lower. This 4-hour cycles is still low. It hasn't turned back up. So if you give me a move, guys, back to 2100, 2000, I'm just going to be buying a second and third lot. Anyway, guys, just a quick lesson there.